Treasury Secretary Janet Yellen, you join us now from India, where you're meeting your counterparts. It's the G20 finance ministers and central bank governors meeting. And really the cloud around this meeting is the fresh data we got out of China today. Beijing slowing momentum in their growth. Citi is talking about the growth target being at risk. I'd like to start, Treasury Secretary, with the fact of whether you think this means there could be an increased chance of a U.S. recession.
Well, you're talking about the slow growth number from China. Is that right, Annmarie?
Yes, correct.
So I think China has seen slower growth than they expected upon opening up from COVID. Consumer spending has been relatively weak. It looks like consumers are more focused on building back their savings buffers. And so growth has been slow. And as you know, youth unemployment is quite high there. So I think the Chinese are concerned about sluggish growth in their economy.
But what does this mean for U.S. growth and global growth overall? Is the soft landing in the United States still your base case scenario?
Well, many countries do depend on strong Chinese growth to promote growth in their own economies, particularly countries in Asia. And slow growth in China can have some negative spillovers. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think that we're on a good path to bringing inflation down. The most recent inflation data were quite encouraging, that we're making progress on getting inflation down. But as I'd hoped and expected, that would occur in the context of a strong labor market, and we continue to see that. The fact the labor market's been so strong has encouraged more prime-age people to enter the labor force and to work, and that's helped take a bit of the heat out of the labor market. The fact that growth overall has slowed after we enjoyed a rapid recovery, that's normal, but it's also led to some reduction in the desire of firms to hire. Still lots of job openings, but wage growth is moderating and inflation is subsiding. So I think we're in a good path on the United States.
Okay, so it sounds like soft landing is your base case, and you don't think we're going to see a recession. Yesterday, when you were speaking to reporters, you talked about this de-escalation with China, and you rolled out lifting tariffs as part of this de-escalation with Beijing. So what is on the table?
So, several years have gone by in which we've had COVID lockdowns, especially in China, and very limited contact between senior officials in the United States and China. And we now have a new economic team in China that we need to establish relationships with. We need to get our relationship back in a more stable place, put a floor under it, and try to promote better understanding between our countries. So I recently made a trip, met with a number of senior Chinese officials, including the new economic team there. We had very candid discussions. Each side raised a series of concerns. Chinese certainly mentioned their concern with the tariffs that we have in place. But we had constructive conversations, deepened our understanding and of the economic situation and of our concerns. We're able to address them and agree that there are a broad range of global challenges, particularly debt and climate change, that affect the entire global economy that we need to work on jointly. And I'm hopeful we'll be able to do that more successfully. On tariffs, we put tariffs in place on China because we had underlying concerns about unfair trade practices, particularly those affecting intellectual property and technology transfer. And those concerns really have not been addressed. We're undergoing a 4-year required review of tariffs. And of course, China also retaliated, putting tariffs in place on us. We have to see what comes out of the 4-year review. But I would emphasize that really the underlying concerns we have not yet been addressed, and we need to work on that going forward.
But when you're looking at de-escalating, we're trying to figure out what will be left on the table, because what it feels right now is the administration is actually just amping up when it comes to potential tit for tat with Beijing. There is the outbound executive order that potentially we could see as soon as the end of July or this summer. Could that be a place, pulling a punch from the outbound executive order, maybe making that a little bit more toned down? Could that be a place you could de-escalate with Beijing?
Well, first of all, I want to say that what we're doing is not tit for tat. What we're doing is putting in place controls that are designed to protect U.S. national security and, in some cases, to address fundamental human rights abuses. And we do intend to protect our national security. We have export controls that play an important role in accomplishing that. And what I try to explain to our Chinese counterparts is that our desire is to make these U.S. policies clearly national security focused, transparent, and narrow. That we're not attempting to stifle economic progress in China, that we have and want to continue to have deep economic ties. After all, this year our trade has reached almost $700 billion. We feel
but if the national security
we have
concerns,
a healthy economic.
Madam Secretary, if the national security concerns are so important, Jake Sullivan called for this outbound executive order 2 years ago. Why is it taking the administration so long?
So we are looking carefully at outbound investment controls, and they would serve as a complement to the export controls that we have in place to make sure that we've covered all the channels by which technologies can be transferred to China that we think pose national security concerns. I explained to my Chinese counterparts that if we go forward with these, they would indeed be narrowly targeted. They would focus on a few sectors, in particular semiconductors, quantum computing, and artificial intelligence, that they would contain a combination of notification requirements and, in very narrowly scoped portions of these sectors, prohibitions. But these would not be broad controls that would affect U.S. investment broadly in China or, in my opinion, have a fundamental impact on affecting the investment climate for China. So these would be national security focused.
It sounds like it's already done. Is the administration have it finished and is just waiting for a good time to release it?
We want to make sure if we do this that we get it right, and we've been working on the details. If we do go ahead, and there is a good chance that we will, that we would put out, along with the executive order, a notice of proposed rulemaking so that the public would have a chance to comment on these proposed controls, and we would receive a wide range of public input before finalizing anything that we do.
Madam Secretary, you obviously have a lot on your plate when it comes to re-engaging with China and your discussions there just off this trip from Beijing. I'm curious how difficult the dialogue is going to continue to be after the revelations about the Chinese hacking of your colleague, Secretary Gina Raimondo.
So I do have concerns about hacking of U.S. government officials or private individuals or companies, and I know the United States has expressed those concerns, but we intend to continue to deepen our discussions with China to increase our engagement. It's especially important to explain what our motivation is, to avoid misunderstandings that can lead to unnecessary and dangerous escalation. President Xi and President Biden agreed in Bali that senior officials, including those in economics, should interact more regularly. And I think an outcome of my trip there was that we will have deeper ongoing engagement at all levels.
When did you learn about the China email hacking? I'm curious if you had a chance to maybe bring this up on your trip to Beijing.
I believe I did not know about that in Beijing. It wasn't one of the things that we discussed.
I also want to ask about what's happening on the ground, something that I know is very important to you, and this comes to debt relief of these developing countries. There has been this push from the U.S. administration to use the Zambia principle for other countries like Ghana, but that's not getting the broad support it needs in India on the ground amongst other G20 finance ministers. Is China the holdup here?
Well, look, we designed, the G20 designed something called the Common Framework, which is a set of principles and processes to deal with unsustainable debt situations. And we would like to see countries that apply to use the Common Framework get rapid relief from their debt that they need in order to grow and be able to attract investment and undertake IMF programs that can help to stabilize their economies. And the few cases that have applied to use the Common Framework, including Zambia, have taken far too long. The process has been onerous, and it's taken a very long time to get debt relief. We are pleased that China has become, China, after all, is a major creditor of these countries. We have been anxious to see China move more quickly and take a more constructive attitude, participating in these debt relief talks. And getting agreement on Zambia was an important step. China has also been helpful in Ghana, the case of Ghana and Sri Lanka. And I'm hopeful that we'll be able, going forward, to make more rapid progress. I should emphasize that the debt issue is one that concerns the entire G20, and we are united in wanting to see this framework work more effectively, and it is a priority for India as well.